Welcome to the Innovators and Investors Podcast. I'm Kristian Marquez, founder and CEO of FinStrat Management. At FinStrat, we provide CFO-led accounting, finance, and reporting services to assist clients monetize their business. Stick around to the end of the podcast and I'll share how you can be our next guest. Now on to the show. Hello, and welcome to another episode of the Innovators and Investors Podcast. I'm your host, Kristian Marquez, founder and CEO of FinStrat Management. Super excited because with us today we have Jeff Schwartz, founder and CEO of Data Room HQ. Jeff, welcome to the podcast.
Thank you so much. Really appreciate you having me.
I'm excited to have you. So why don't we start? Would love to understand the services that Data Room HQ provides.
Yeah, we work with both B2B SaaS companies. Typically, they have more than 50 customers, and we also actually work with investors. And so for the B2B SaaS companies, what we do is we automate all their metrics reporting instantly, and then we also build models on it to tell them what is driving those metrics so that they could optimize things like net retention and growth and things like that. On the investor side, it's doing similar types of things, except it's automating the due diligence process. So all the analysis that goes into due diligence, they go into a data room, and then they are able to get the same types of insights and analytics when they decide to make an investment or not.
And so what was the lead-in inspiration for starting the company?
Definitely. So let's see. So I was at a really fast growing startup for 6 years prior to starting Data Room HQ. It was in the machine learning space. I joined there pre-revenue and we got to the proverbial 100 million plus in ARR. And it was just an amazing journey. And we were always beating our numbers. I don't think we ever missed a quarter. And I was always like, like, how are we doing this? What are we doing that's so unique here from a process and business standpoint? And it kept coming back to one thing. So we had this meeting we called CROC, Chief Revenue Officer by Committee. And we had this room. It was referred to as the command center at the company. So for anyone who's listening out there, if they remember the command center because they were at the same company, they know what company I'm talking about. And essentially we had these 8 massive TVs and we had our leading indicators, key results, everything flowing live into the system. And every single week, myself, the CEO, the CFO, head of product, head of different industries, head of different geographies, head of marketing, sales, we all met and we actually went through our leading indicators to key results every week. And we feel like we got ahead of any issues before they became issues. We were so proactive in how we managed the business. And I'm a huge data person, if you couldn't get that already. But I thought every company ran their business this way. I was like, this is my first startup. I was like, yeah, you have to run your business just through the numbers. So I would talk to investors. I was talking to people internally, but other founders that I knew, and they didn't. It was still very subjective. And I was like, why is this the case? And they all came back to it's freaking hard to do that. And I was like, okay, I think I could build software to solve this problem. So that's what I did is I went out to build software so that every company can have their own little virtual command center so they can see all their leading indicators, key results live and drive their business through that.
So a whole bunch to unpack, and I love it. We're cut from a similar cloth. We agree there's tremendous value in interpreting what the data has to tell us. And the other thing too, as I talk with my relationships on the subject, I think back to high school when you say, when am I ever going to use algebra? And a great example, once you understand, then it's just a whole host of variables that make up formulas that drive these metrics. But I would love to hear back when the CROC was in place, any metrics in particular that you found that you gravitated towards when interpreting?
Yeah, everything from opportunities being created, so in real time, so like you have a goal, like you have to create a certain number of opportunities, win rates, deal size, like all the leading indicators, early things you could find, number of meetings, all that stuff can end up driving a whole forecast of things. But then from an actual business standpoint, retention is in the software space is by far the most important. It compounds all results really. So obviously net retention, gross dollar retention, gross logo retention rates. However, for earlier stage companies, I like cohort analysis. I think it is the quickest way to determine if you have product market fit. Both you can look at cohort analysis from a logo perspective, a dollar perspective, but even like a usage perspective. And yeah, there's a lot of things to unpack with cohort analysis, but you're looking for it to flatten to some place where you feel like you could build a durable business on. So really everything would flow through the system and then, yeah, to drive it. But I think in the SaaS world, and retention that makes and breaks companies.
So you think about the formula for reoccurring revenue, new plus expansion minus churn, whether it's existing clients or just losing clients, 100% agreed. My sense is that a lot of time founders just focus on new and not think about how they're managing their existing book of business. And so keeping an eye on how are clients continuing to use a product becomes extremely valuable. And a lot easier to keep a client than it is to have to go out and get a new one. Would also love to hear congrats on the numbers and beating them every quarter, but also love to hear what were lessons learned that things could have gone better that have influenced how you run Data Room HQ today.
Yeah, I'll talk about some of the lessons, or I'll shift over to Data Room HQ and some of the areas where, some of the things that we've unpacked and uncovered in this new world since I started the company. I started the company in 2021, but like one of the areas that I was so used to working back in the day was a channel such as like cold outreach, right? Like so many leads and opportunities come through cold outreach. In this environment, I feel like it's much harder. And I thought, so I was coming in thinking, yeah, cold outreach is gonna be a great channel. It's proved out to not be a great channel for us actually, because it's very noisy. It's very hard to get people's attention these days. So we've actually shifted more towards things like events and actually meeting people in person, content. I've never done ads in my prior life, but ads and having high intent people searching high intent type of words for ads and really getting out there more. And I think there's a lot more now. It kind of went full 360. It used to be all about like cold outreach, and now it seems to be coming back somewhere in the middle where it's like actually meeting people in person is a very natural way to generate opportunities. Events has been quite useful for us as well.
And if what's your opinion? Do you think it's cyclical or do you think it's here to stay?
So I think it, what happened maybe is okay. So it started okay outbound. People see some promise in it. They're getting opportunities through it. They're closing deals through it. More and more people do it. And it's one of those things where more and more people do it. It becomes noisier and noisier. So now people doing things that aren't that like events or ads or driving inbound, like that's now becoming more valuable. So people are going to start shifting to that. It is cyclical. I think some of the AI SDR type of stuff out there has made it even more. It's easy to do now, and it can get very noisy very quickly. So we'll see. I don't know. We'll see. I'm sure new channels will pop up. Podcast is a amazing way to generate demand now. Yeah.
Okay. So if we can continue this theme, would love to hear your experience with how Data Room HQ has achieved product market fit. And then from there, how do you think about scaling the business, both top line and then just process?
Yeah. So I think product market fit from a metrics or a numbers perspective, and I'll jump into kind of like how we thought about it. But in the early days, I think it's just making customers wildly successful. That's why even for us, we only work with typically companies that have more than 50 customers, because in the early days, as much as I love numbers, as much as objective as I am, it's just making every single customer as successful as possible, doing what you got to do to make your customer successful. So in the early days, it's all about that. And then from a numbers perspective, I think very quickly you start to look at cohort analysis and how people are using the platform, but starting to measure retention and making sure you have a durable business. Now, from a like how we thought about it, from a finding it for ourselves, one is the space I'm building in. I did live this pain firsthand. It wasn't like I'm not like building in a space I'm not as familiar with and things like that. So I lived this problem firsthand. So that got us like 80% of the way there, building a lot of it. And then we had a design partner program where we essentially worked with early pioneers. They would use the platform, give feedback, and then we would consistently iterate based off of that to get to where we're at today.
And I'd love to hear. So one of the reoccurring themes that come up with founders is the role that customer success plays in building a software platform. On one hand, you have founders who may be influenced by investors who say, I want to minimize the amount of people I have in the loop because it's going to have an impact on my margins. Then you have a class of founders who are like, no, this is what it's going to take to foster adoption and or just make sure that my clients know they're well taken care of. I'm going to spend the money. Would love to hear where you fall and how you think about it when you're running.
Yeah, so it's interesting because I think you need to build really strong software that could do it all, but I don't think you could. I don't think we live in a world where you can just throw software at someone. I do think you need to, at least at the early days, get them set up for success and be in it with them. I think that's a huge differentiator even these days. It's getting easier and easier to build software. So where a lot of the differentiation could come in is how do you make your users and your clients successful with that software? So we put a huge emphasis on it actually, even though like we tout ourselves on literally you can get stood up in the same day with our platform. That's how quick it is to get up and running. But I even still meet with every customer once a week just to make sure that they're successful. Any questions, helping them with doing whatever it takes to make them successful, because it is, you want your software to do everything, you have to still have, you can't just throw it at them anymore. It's people's attention spans are much lower these days. So if they get lost anywhere in your platform, and if you have a really robust platform, you're going to get lost somewhere at some point. You need to be there for them to do it, at least in my opinion.
It builds on your observation around just noise in the marketplace because 100% agreed. There's on a daily basis, everyone's getting bombarded with messaging. And so if you can minimize the amount of time that someone has to spend on uptake, I think it's wildly beneficial. I think it also goes a long way to showing clients by virtue of action that you're invested in the relationship and that you care. So big part of that too is the quality of the people you're going to introduce to your clients. Would love to hear your philosophy on managing people and building teams.
Yeah, so let's see. So in terms of people, the world's gotten interesting, right? Because now more and more companies are remote. There's less in person and things like that. Building a good culture and teams, it's definitely like a different challenge these days. It used to be you can go and you'll naturally you're building that because you're in the office with them, talking to them all the time. So you have to be a little more intentional in how you build company culture, in my eyes. So we have a great team here. We are all over the place. We have time zones. We have people all the way on the West Coast to all the way in India. We're all over the world in terms of covering the time zones. So how do we manage that and build a culture around that? So we have, from an engineering standpoint, we do typical sprints, daily stand-ups. We have demo days on Friday to always try to promote getting to that next release and shipping. On the business side, we do similar type of thing. We call it In Sync, for anyone who knows their 90s boy bands, where we all get together and we keep pushing the business forward through that lens. It's much more intentional with communication. We have company meetings to keep ourselves intentional, try to get the team together in person once a year for company offsites. Yeah, I think, and then it comes down to hiring the right people, right? I think when hiring, you just have to, people have to, because people need to, you want to hire people who feel a sense of agency because, you know, if they're remote, they're going to be doing their own thing and stuff. So they have to have that sense of agency, and you want that. Yeah, but I will say it is much harder when everyone's remote than when they're in person. It's a different type of challenge, which was new for me starting in 2021.
I think your approach is brilliant. By consequence, our firm is 100% remote as well, and we've adopted a similar playbook where we'll get the team together at least once a year, and just found that face time is invaluable, especially having spent a good portion of the career in the office. I don't miss the commute.
Exactly. I completely agree. So I think there's the best of both worlds there. As long as you get the right people and see, it gives them the best of both worlds. So we've always operated on work hard, like that's number one. Like work hard, do good work, and then yeah, in the middle of the day, if you have to go do your laundry or whatever, go do it. I don't care, as long as you're getting your work done, you're not missing the meetings. Then do what you got to do. It just, in my eyes, it changed the work schedule from, you have like start time and end time. Now it's, and this is again personal, I love working, so this is, not everyone's like this, but I look at it as a 24-hour day now, and it's just, and work is 24 hours, but I have things that I'm doing throughout that 24 hours, and the team actually operates similarly. Again, that depends on the person. Yeah, but
It seems to be a natural evolution, especially within our ecosystem. And my sense is that it also helps to attract and retain A players. And so it totally makes sense. And like I said, agree with the approach. Would love to hear your experience with financing. Have you bootstrapped? Have you raised outside capital?
yeah, we raised 4 million to date in total. Our last round we raised 3.5 million, which was about a year ago. Interesting story, actually. I could tell the story. So yeah, Carta actually wrote a whole like blog about it if anyone wants to check that out. But so what, the one of the firms that co-led our round, Oceans Ventures, they're based in New York, great firm. Stephen Rosenblatt out of there. He had posted on LinkedIn, and it was something along the lines of that you should have like your investors, your board, your company, all seeing like the same type of view of the business. And that's like my vision, right? That's like what I'm trying to build. And so I reached out to him cold. This was in December of 2020 or 2020. No, my dates are all good. But regardless, and I reached out to us. Hey, by the way, we're building. That's what we're trying to build. That's the software we're building. We met, I think, the next day, and then that ultimately led to a term sheet. I wasn't looking to raise around, but it's just naturally happened. So it was pretty interesting because so now I have a term sheet, but I hadn't talked to any other investors, and it's okay. I gotta guess I must think better go start going to figure out how to fill this whole round in. So that's how it all came about, and which is pretty interesting because usually you have a process, whatever it is, like a 2 week to 4 week process where you're like meeting everyone, and then things come at the end, and then you put a round together. Ours was, we have a term sheet. Now we have to go kick off a bunch of brand new conversations and get people excited. So it was definitely an interesting way about going about doing that. It was a little backwards, but it obviously worked out. And yeah, but it was a lot of fun.
And so I know there are a lot of founders in the audience who would love to hear your opinion on, now that the round is done, how are you thinking about the next financing, whether it's debt or equity or equity?
Yeah, there's pros and cons to both, I think. So it's really, I think, it is a little situational. But for us, I believe in this, like trying to build the company in a way where you have extreme optionality. Essentially, I build it in a way where essentially you want to get to cash flow positive if you can, but but as soon as you see those signs where if you throw more money into this engine, it's going to, take off, you go and raise more money. But I want to, at any point, be able to turn switches to be cash flow positive so that I can control my own destiny. So I always look at it as I want to be able to control my own destiny. And then as soon as I see signs of, oh, this channel I want to double down on because I found repeatability and product market fit in that channel, throw the money into that engine and then go into crazy growth modes. But I'm a big fan of having that optionality. And to do that, you have to keep burn under control. In my opinion, you have to always have a line of sight to profitability around how you can get there. I think a lot of companies, when they get in trouble, is because they get a little too far ahead of themselves, which is hard because you're balancing like VC. You need a VC outcome, but you're balancing. But yeah,
And I'd say you're wise, especially given the current landscape where interest rates have created perhaps more of a risk-off mentality within the early stage ecosystem, and VCs are subsequently more closely scrutinizing not only performance metrics, but cash in particular, in founders' ability to adequately manage capital. So good on you. Jeff, we're getting close to the end of the podcast. For other founders in the audience, what advice would you give them as they're getting started and want to look to mirror the success that you're having with Data Room HQ?
yeah. So I get this question a lot actually from like my friends who are thinking about going on a journey, and there's like usually it winds down to three pieces of advice that I give. Two of them are very related, but the first one that I always give is no one can underestimate. I would never understate the ups and downs of being a founder. It's unreal. Like it's not even day-to-day ups and downs. It's like meeting to meeting ups and downs. One day you're thinking like, hey, I'm gonna be the next NVIDIA. And then the next day you're like, whatever the opposite of NVIDIA is, that's what I'm gonna be. Like it's a constant up and down. And the reason I say that is you just have to, before jumping into a journey like this, make sure you can handle that. It's not for everyone, but just be prepared for that because it's not just day to day or week to week or month to month. It's literally like hour to hour. You have different ups and downs. One of the reasons of that is my second piece of advice that I give them is just like any yes in the early days is so impactful, it means so much. And that's partly why the ups and downs, because yeah, you might be having down, but as soon as you get that yes, it changes. And that can be in fundraising, right? Maybe you get 50 no's, but you get one yes. And that gives you a chance to build this iconic company that you want to build and go after your mission. And then in the early days with customers, right? It's not like day one, you need 1,000 customers. Maybe you're looking for 10 or 20 customers in the early days. So each yes you get, it's okay, I'm onto something. But each no hurts, right? Because you're like, so it makes you question. So you might get a no. Yes, so take it over. Those two are related. And the third one I always say is the learnings. It's like what you learn on the founder journey is there's nothing like it. There's no school for it or anything like that. It prepares you for so much when it comes to business. Even like little things. I'm not even like this, not even what I'm mentioning, but how to start a company, like incorporate like corporation docs and dealing with lawyers and getting things off the ground and just like all the nuances when it comes to hiring and setting systems up, just everything, not even talking about the core business at this point. Like you realize how much is going on at a company really prepares you for it, and the journey is just amazing. And it leads I guess it's the last more like piece of advice. Like a lot of athletes, when they're on their journey, they'll talk about like, as long as I leave it all on the field or win or lose. And I think of it like that. You get this opportunity, and as long as you're giving it your all, like on day one, and you're with all the data you have at any given point, trying to make the best decision that you have based off that data, like the journey is just so worth it, regardless of the win or lose. Of course, you want to win, but the learnings and the journey become like amazing.
Sage advice, and 100% agreed. And being a founder is extremely fulfilling. And the evolution that takes place personally and what you learn about yourself, there's few probably parallels, or at least ones where you can have a little bit more control of to get something out of it.
Yeah.
Jeff, awesome podcast. I really appreciate your time. If there's anyone who's listening who says, hey, I'm interested in being a member of the Data Room HQ, or investors who'd like to learn more, how can they find you?
If they want to message me directly, they could feel free to shoot me a note on LinkedIn and message me. They can find out more about us at dataroomhq.com, but they could honestly feel free to just send me a direct message via LinkedIn.
Fantastic. Jeff Schwartz, founder and CEO of Data Room HQ. Jeff, thank you.
Thank you so much for having me. Really appreciate it again.
Our pleasure. Kristian Marquez here. Thank you so much for listening to the Innovators and Investors Podcast. If you're a successful founder or an investor, would like to be on the podcast, please visit podcast.finstratmgmt.com/podcast-guest. If you've got something out of this interview, please share this episode on social media. If you know someone that would be a great guest, please tag them on social media to let them know about the show and include the hashtag Innovators and Investors. I'd love to see your posts and suggestions. We're regularly putting out new episodes and content. To make sure you catch each new episode, please subscribe to the Innovators and Investors Podcast. And your thumbs up, ratings, and reviews go a long way to help promote the show, and it means a lot to me and my team. Would you like to know more? Go to our website, finstratmgmt.com, or follow us on LinkedIn or on X. Our handle is @FinstratMGMT. This is Kristian Marquez. Thank you for listening. Until next time.